Hey everyone, Timo here. This month, we saw something big in the Philippine media industry. True FM made a frequency switch in Metro Manila, moving from 92.3 to 105.9. After 14 years of sticking with the Radio 5 brand, launched True Network. This new multimedia brand aims to take True FM even further, branching out into TV with True TV, podcasts with True Pods, and more digital content on True DG. It's a rebrand with ambition, but it's also a sign of the times. The media landscape here is transforming, and fast. Which brings me to something else I've been mulling over. What if MediaQuest, the powerhouse behind Signal, TV5, and a whole bunch of other broadcast assets, and fun fact, they have an artist agency too, decides to go public on the Philippine Stock Exchange? With established players like GMA Network and MBC Media Group already making waves, going public could be a huge opportunity for MQ and its stakeholders. So today, let's explore why this could happen and what it would take for them to make that bold move. And of course, before we dive in, don't forget to like, subscribe, and hit that notification bell so you're always updated. To understand why MediaQuest might want to go public, let's take a closer look at the media landscape in the country. We've seen some pretty big shifts in how Filipinos consume media. Digital platforms are booming and traditional broadcasters, well, they're feeding the pressure. Remember when ABS-CBN was king of the hill? After they lost their franchise renewal at the start of this decade, it shook up the whole industry. GMA Network and NBC Media Group quickly stepped up to fill the void, taking the lead in local TV and radio with solid programming and a strong viewer engagement. Now here's where MQ comes in. Owned by PLDT Beneficial Trust Fund, they have been sitting on some prime assets. Signal, which is pretty much the top choice for direct-to-home satellite service, and TV5, known for its generous approach to content since the start of this decade. MediaQuest is in a huge position to drive in this landscape. If they play their cards right, and going public, well, that might be a game changer. But why should MediaQuest consider taking such a big step? Here are a few reasons that make a solid case for them. 1. Access to capital. Think of going public as opening up a new bank account with a massive deposit option. By selling shares to the public, MQ could raise significant cash. This influx of money can then be funneled into areas that need investment, new tech, expanded content offerings, and initiatives to boost audience engagement. For example, imagine MQ having the financial muscle to launch cutting-edge streaming tech to improve signal play that can compete with the international counterparts like Netflix, Disney+, Prime Video, and HBO Go, now called Max. It's like stocking up on fresh ingredients before a huge cookout. You need that prep to make an impact. 2. Increased credibility and visibility. Being publicly listed on the PSE isn't just a status symbol. It's like putting on a well-tailored suit before a big meeting. It brings credibility and visibility, and that's attractive to both advertisers and content creators. When companies go public, they're opening the door to potential partnerships, paving the way for lucrative deals. For MQ, that could mean teaming up with regional content creators or even big international studios, giving them new revenue streams. 3. Market expansion. With fresh cash and increased credibility, MediaQuest could explore new markets or even take over smaller companies. This expansion would mean they're not just relying one or two major revenue streams. Imagine MQ owning a stake in everything from gaming to online news, giving them a diversified portfolio. Just like a chef with a pantry full of unique ingredients ready to cook up something for any occasion. 4. Responding to competitive pressure. The media scene is fiercely competitive. Think of it like a race where GMA and MBC Media Group are at full speed. If MediaQuest wants to keep up, they need to act fast. Listing on the PSE gives them the resources they need to innovate, grow, and keep pace with their competitors. To get a sense of what it might look like if MediaQuest went public, let's look at GMA Network, which took the lead on July 30, 2007 at an initial price of $8.50 per share. Their IPO allowed them to expand, improve their programming, and bolster their brand. Meanwhile, NBC Media Group, although it also went public, has kept a lower profile in terms of frequent stock updates. Now, MediaQuest can learn a lot from these examples. GMA's IPO opened up a lot of doors for them and is still one of the more successful listings in the media sector. MediaQuest could follow their lead, but with their own twist to ensure they're ready for the public debut. Now, if MediaQuest decided to take the plunge, there are some requirements to meet. Think of it like preparing for a big exam. You got to check all the boxes to pass. Here's a rundown of what's needed to get listed on the PSE. There are 11 of them, split between two phases of 7 and 4. The first part, the first 7, is the corporate and financial diagnostic phase. 1. Operating history. MediaQuest should have been active for at least 3 years, doing pretty much the same thing during the time, so this item is a check. 2. Profit test. They need a total net income of at least 75 million pesos over the 3 fiscal years and a minimum income of 50 million in the latest year. So even if TVJ rake in the revenue, apart from UAP, the income is another story. 3. Shareholders. MQ need at least 1,000 shareholders, and each one should own shares that add up at least 1 board lot, so that's a little bit of a problem. Number 4. Stockholders' equity. At least 25 million pesos in stockholders' equity in the year before application, so I think it's okay there. Number 5. Public offering. At least 20% of the shares must be offered to the public, so that's another problem. 6. Financial statements. Audited financial statements for the last 3 years plus the recent interim statements that follow international accounting standards. Diyan sila mahina. Number 7. Board of Directors. A board with at least 7 directors, including 2 independent ones, and each director has to own at least 1 share. For MQ, requisite number 1 is a big check, numbers 4 and 7 are presumably passed, the rest are the big problems Reliance had to face. Assuming the rest are cleared and resolved, they'll move on to the next 4 requisites, which are the compliance fees and requirements phase. Number 8. Minimum free float. Depending on how big MediaQuest company is, or the market cap, the company has to meet specific float requirements. Here's a table for reference and pause this video for reference. Number 9. Fees. There are fees to cover for listing and annual maintenance, which can range significantly based on the company's size and market cap. 10. Lockup requirements. Pre-IPO investors might have to adhere to lockup periods to avoid stock dumping right after the listing. And number 11. Electronic securities lodgement. Securities must be registered with the Philippine Depository Trust Corporation. Now here's some quick tips. Prospective companies for listing are recommended to set up an audit committee and a corporate governance committee to keep things in line with regulatory requirements. In addition, consider doing a readiness report and take advantage of consultations from PSE to get prepped for the IPO. These requirements, especially the profit test and shareholder requirements, are where MediaQuest might need to focus. If they're serious, getting their financials in top shape would be essential. If MediaQuest were to go public, it wouldn't be a walk in the park. There are several challenges they need to overcome. Regulatory compliance. The ownership structure is an issue right off the bat. MediaQuest is owned by the PLDT Beneficial Trust Fund, and the law here says that media companies must be 100% Filipino-owned. This ownership arrangement could be seen as skirting that requirement, so they'd likely face some serious regulatory scrutiny. Remember a certain mainstay columnist with cranky conspiracy from the Manila Times making that drama a decade ago? 2. Market competition. In South Triangle, you've got the big dogs, each has a loyal following and well-established market presence. TV5 has tried to capture market share by collaborating with Nasha and Viva for content sharing, but they're still struggling to make a big impact. Going public could help, but they'll need to be careful with brand positioning and market perception. Speaking of, number 3, public perception and brand image. Let's face it, MediaQuest isn't the first name on most people's minds when they think of Philippine media, unless it's about sports. If they go public, they need to invest in brand building, possibly through big events, strategic partnerships, and new shows that resonate with the Filipino audience. Side note for a moment. With bossing Vic Soto and with his Metro Manila Film Festival entry this year that is so not like any Cabezote or anything comedic as his two-time show that he was best known for, this has to be the moment. Plus, the media scene can be volatile thanks to political changes. Any shifts in laws or government policies affecting media ownership or operations could throw a wrench in MQ's plan for going public and its long-term success. 4. Strategic execution of growth strategies. Getting their growth strategies right is crucial, whether that means diversifying content or wrapping up digital platforms like True Network did recently. If MediaQuest doesn't hit the mark here, it could hurt their revenue and scare off potential investors. To tackle these challenges, they'll need some solid planning, smart execution, and maybe even a bit of restructuring to keep up with what the market and the regulations expect. At the moment, MediaQuest going on public on the stock exchange isn't in the cards. They haven't shared their key business numbers regularly like Nasha or Kamining have, so it's tough to make that leap, but it doesn't have to be just a pipe dream forever. If MQ took that big step and went public, it could potentially shake up the Philippine media landscape in ways we haven't seen before. New investors, more funding, and a fresh image could give them the firepower to push forward in a crowded market. At the same time, this could be a game changer for consumers as well. With the right moves, MQ could bring in more local content, invest in streaming tech, and even compete with regional giants. It's exciting to think about it, right? Now, the ball's in MBB's court. Will they step up? Let me know what you think in the comments. Until then, see you next time.